Hi there. Do you have a loan, whether it is a personal loan or a business loan, that you are finding it difficult to service the loan? You are struggling to repay the loan. If that's the case, this video is for you, because in this video, I'm going to talk to you about how to manage your loan better, whether it is a business loan or a personal loan. I'm very sure at any point in your life you've taken a loan. Of course, each and every person out here has been through different circumstances. But the fact is that these particular loans or leverage are very essential when it comes to development and growth, whether it is at a personal level or a business level, because most people out there don't have the huge financial muscles for them to do the developments which they desire with just a very regular and small amount of income. That's why loans are important, but then you need to manage them very well. You are all much welcomed to the Money Daily TV. My name is Afagza Sifuna. If you are new here, kindly consider subscribing to this channel, and while you still at it, drop a like on this video. Having said that, the very first and essential thing which you need to do when it comes to you managing your loan is you separating business inflows and personal inflows. Guys, when it comes to you managing a loan, you first of all need to understand how you're managing your personal inflows, business inflows, and also how you're managing your business loans and personal loans. Out here, people have personal loans and also business loans. You having clarity on which is which, and even so, the terms etc can assist you manage very well. Because at the base of it, you can be able to separate the bank accounts. For different loans, you can be able to separate bank accounts and plan cash flows those accounts in a very different way. And even so, you can plan yourself on where the inflows to be able to service these loans are going to come from. And I'm saying so because out there, we have, for example, even have 5 concurrent running loans, maybe a few personal and a few business. At the end of it, if loan is used appropriately, it's going to assist you develop real fast. But then again, you need to have clear demarcation of business loan versus personal loan and have a plan for each of these. Okay? And then the second tip, also tied to the first one, is you having a deep understanding of your loan terms. It is quite interesting that all of us out here are guilty as charged when it comes to signing off terms and conditions without reading. I'm very sure when you are applying for your loan, you are given maybe a document 3 pages long with terms and conditions. Chances are you never read because you wanted to sign off that loan and get the money. Yes, you got the money, but it is good for you to understand some of the key terms which are driving a particular loan. For example, interest rate, the APR rate. How much interest rate are you paying for your loan? Okay. The loan length. How long are you going to repay a particular loan? The monthly minimum payment, penalties in case you default, etc. All these terms are really going to assist you know how optimally to manage your loan, because you cannot manage what you don't understand. Basic understanding of your loan terms is going to assist you be on top of the game when it comes to any decision you make around your loans. So ensure you understand the terms and conditions, okay? And then the third and actually a critical step when it comes to you managing your loans, whether it's business loan or personal loan, is you prioritizing high interest debt first. Look here, guys. You could have several loans. Maybe one of it is charging you 20% interest per annum. Another one is charging you 3% interest per annum. Another one, 7% interest per annum. These loans can't be treated equally. Reason being, the loan with the highest interest rate is the one which is very detrimental for you. Because if you delay paying, you're going to attract high penalty. If you don't pay at all, it's going to get you in very huge trouble. That's why you need to prioritize the loans which have high interest rate and plan to clear those off fast as you continue clearing those with low interest rate. And in fact, if you can afford extra amount of income, please pay off those high interest loans even way early, because by you paying off, you're going to be reducing your effective amount which is going to be used to repay the loan, because you're going to be reducing the principal as soon as you can. And with reduced principal, chances are the interest on the remainder amount of money is gonna be less and less over time, and even so the burden which you're gonna incur is gonna be less. And then guys, the fourth essential thing which you need to do is you creating a debt management plan. Of course, this is tied to the interest rates, your plan of payment, your incomes, etc. But having a solid plan is going to assist you have the discipline of sticking to your plan. Instead of, for example, having multiple loans and then all you are doing is estimating or even guessing how you are repaying off these loans. That won't assist. By you having a very clear debt repayment plan, that is going to assist you ensure that you go about clearing your loans in a very, very clear and coordinated way. Okay? And then the fifth tip, which is very essential when it comes to you paying off your loans, is that you need to think about boosting your cash flows. Let's look at it this way. Maybe you took a business loan, okay? You took the business loan with a good intention. But the unfortunate thing is that you need to think about boosting your cash flows, because ultimately the way you are locking in cash flows is what's going to determine how you're going to pay off your loan. For example, you could think about you increasing sales. Think about the business tricks, the business approaches which you can use to increase your sales. Okay? You need to think about how you cut business expenses, because over time, if you can't cut business expenses, then it's going to mean that these expenses are going to eat into your available cash, and in return also it might affect your ability and how you're going to go about paying off your loans. And lastly, also how you're collecting your debts. In case you are dealing with receivables, you might think about how to up your collection game, because by you ensuring you have a high collection rate, then it's going to mean that you're going to also have the amounts of money which you need to clear off your business loan. Because you can't have a business loan and yet people out there are not paying you the monies which they owe you, that is going to affect you over time. And of course, you are aiming to better manage your loans. Okay? And then guys, the sixth tip which you could consider when it comes to you dealing with loans is something which you call consolidation. Look at it this way. You might have maybe 5 loans which have different interest rates. The truth is that even if you have a debt plan, chances are these loans might be confusing you from time to time. That's why it will be important for you, for example, to do something called consolidation. Basically, you getting one huge loan to offset all these existing loans and just have one loan which you have clarity on. And it's going to be good for you if this loan also have a very low interest rate. Think about it. How awesome will it be, for example, you paying off a loan which has 20% interest rate, 10%, 15%, 7%, and then consolidating all these with a loan which has 6% interest rate. Of course, when you are looking for consolidation, you are also looking for favorable rates, because at the end of the day, you are aiming to reduce your burden while also having clarity on the loan which you have and how best you're going to go about repaying your loan. Okay? And then the seventh tip for you, which of course is not 100% around the loan concept or loan content, but also it affects loan in a big way, is that think about building an emergency buffer. What do I mean? Don't just focus on repaying off your loans. Ensure you have at least 3 months, 4 months of expenses, or even insurance kind of coverage, so that you don't really get into emergencies which you haven't foreseen, which are really going to spin you off badly, and yet you are already straining to repay off your loan, whether it's personal loan or business loan. So take it serious when it comes to emergency buffer, because emergency buffer of cash for your subsistence, and even so, covering yourself, for example, with insurances out there for other aspects, is going to really assist you focus on just repaying your loan in a way that all the other possible emergencies are taken care of. So take that seriously. It isn't really related to the loans exactly, but then again, it has a possible huge ripple effect on your ability to repay off your loans. Okay? And then the eighth tip for you when it comes to managing your loans is that you need to avoid taking on more loans. A typical saying out there is that if you are in a hole, you need to stop digging, because if you continue digging, you're going to get deeper in the mess. Of course, as I've said, loans aren't bad, because loans really assist us do development out here. But then again, if you have multiple loans already, the best thing you can do for yourself is avoid taking on more and more loans. Because if you do that, you're only going to continue stressing yourself. And the goal is, I know that time to time whereby you might need to take additional loans, but only do so if the loans which you are taking are strategic and also geared towards those kind of undertaking which have high return on investment, high ROI. Because you can be, for example, in maybe 5 loans and then you take another loan, for example, for consumption. That only tells you you're gonna keep straining for you to be able to repay these loans. But if, for example, you take another loan to maybe invest in something which is giving you 15%, and if the loan which you've taken has an interest rate of 7%, chances are you're gonna be able to manage that loan very well, because the gains from this other return on investment is gonna be useful in offsetting that particular loan which you're gonna have taken. So do the math on how best you can go about it. But the most important thing is that if you're getting into an additional loan, ensure it is very, very strategic. Guys, what do you think about this video? Do you think the tips I've shared are useful when it comes to you managing loan, whether it is personal loan or business loan? Share thoughts down below in the comment section. If you have loans, how have they fared for you? Have loans been good to you, or have you found it difficult you being able to repay these loans? Share down below in the comment section. Let's continue discussing. Cheers, guys, and you all stay safe.